pause what you are doing. If you are age 60 or more, or you have an acquaintance in that age group, the information I am about to share in the upcoming moments could have a direct bearing on the amount of money that enters your bank account this month. As of today, a significant alteration to the rules, one of the most substantial in recent memory, has been officially implemented by the Social Security Administration, and a vast number of senior citizens in America have no inkling that this is occurring. We are discussing modifications that might either boost your monthly payment or discreetly lower the amount you have been relying on, all depending on if you are aware of the necessary steps to take immediately. And this is the part that truly concerns me. The vast majority of individuals will not learn about this until the time to take any action has already passed. Now, I have dedicated a great deal of time to translating complex government regulations into clear, understandable language. No baffling terminology, no evasive answers, just direct information that you and your loved ones can put to practical use. In this presentation, I will guide you precisely through what has changed today, the people it impacts, what you should review in your account right away, and the straightforward measures you can implement to safeguard every single dollar you have spent your entire life earning. You have a right to understand the facts. You have a right to straightforward answers, and you have a right to retain every penny that is rightfully yours. If you agree that senior citizens are entitled to transparent, truthful information, click that like button now, and let us begin. Now, before we get started, I would like to take a second to express my gratitude for your presence. Truly, because your decision to be here today, to invest a portion of your day in becoming informed, already places you significantly ahead of millions of other Americans who will be completely caught off guard this month by the events unfolding right now within the Social Security Administration. I don't share that to frighten you. I share that because I need you to realize the critical importance of the next several minutes. So, let's explore what is actually happening. The Social Security Administration, also known as the SSA, has formally put into action a fresh package of rule modifications that became effective as of today. Now, when the majority of people hear the phrase rule change, they tend to disengage. They assume it's just some uninteresting government paperwork that won't really impact their daily existence. But I am here to state with absolute certainty that this is not one of those occasions. These modifications are not merely administrative adjustments. They are not simply a case of bureaucratic reorganization. These are tangible, real-world policy revisions that will have a direct effect on your monthly payment, your benefits as a spouse, the calculations of your work history, and, in certain instances, your coordination with Medicare as well, and each and every one of those elements is of personal importance to you. Allow me to begin from the absolute start, as I believe the most effective way to grasp what has been altered is to first grasp how the Social Security system determines your benefit to begin with. A great number of people, including those who have been getting benefits for a long time, do not have a complete picture of how their monthly payment is actually calculated. And to be frank, that is not your shortcoming. The government does not provide you with a transparent, plain English guide when you enroll. So, permit me to explain it to you right now in a manner that is truly coherent. As you are employed throughout your life and contribute to Social Security via your payroll taxes, the SSA maintains a detailed account of every single year you were employed and the amount you made. At the conclusion of your working years, they select your highest 35 years of income, apply an inflation adjustment to that income, and employ a distinct formula to figure out what is known as your primary insurance amount, or your PIA. That PIA then serves as the bedrock of your monthly Social Security payment. All other factors, such as your age at the time of claiming, your marital status, or if you worked after you started claiming, either increase or decrease that fundamental figure. Now, this is the point where the changes effective today begin to be extraordinarily significant. One of the pivotal updates the SSA has implemented concerns how specific earnings are indexed and factored into that 35-year history. For a long time, various advocates, lawmakers, and retired individuals have contended that the method the SSA used for certain kinds of employment, especially for individuals in roles that did not deduct Social Security taxes, such as specific state and local government jobs, was profoundly inequitable. And as of today, a substantial remedy for that inequity has formally been put into action. It is possible you have heard about something called the Windfall Elimination Provision, or the WEP. And it is also possible you have heard of the Government Pension Offset, which is referred to as the GPO. These particular rules have been the cause of immense frustration and economic difficulty for millions of American retirees, especially for retired educators, firefighters, police officers, and other individuals who serve the public. For many decades, these regulations lowered and, in certain situations, almost completely wiped out the Social Security benefits for people who also drew a government pension from employment that did not contribute to Social Security. Picture working your whole life, contributing to Social Security through various other jobs, and then seeing your check drastically reduced just because you also had a public service pension. It seemed like a penalty for serving your local community. And for a great many retirees, it was financially catastrophic. As of today, that period is drawing to a close. The repeal of both the WEP and GPO provisions, which was enacted into law and is currently being put into practice by the SSA, signifies that millions of impacted retirees and their spouses are poised to witness their monthly Social Security benefits rise, and in certain instances, rise substantially. We are discussing individuals who have been getting diminished benefits for many years, sometimes for decades, who will now begin to receive a more generous monthly payment. And for surviving spouses whose spousal or survivor payments were completely erased by the GPO, this alteration is nothing less than transformative. Now, I want to be certain we are completely clear regarding who this impacts, because I have been receiving a multitude of inquiries about this. If you are employed in a public service role, a teacher, a police officer, a firefighter, a state government worker, a city employee, and your employer did not take Social Security taxes out of your pay, and you also accrued Social Security credits from other jobs, then the WEP almost certainly influenced your benefit calculation. And if you are the spouse, widow, or widower of an individual in that predicament, the GPO might have severely lessened or erased the spousal or survivor benefits that you were owed. Both of those predicaments are currently being rectified. The SSA is diligently proceeding through its internal systems to pinpoint affected beneficiaries and apply the necessary adjustments. But this is the absolutely vital point I need you to understand. This process is not going to be automatic for every single person with no effort on your side. For some individuals, the adjustments will process automatically after the SSA revises its records. But for others, especially those who have not yet applied or whose work records might be incomplete or ambiguous, you might have to get in touch with the SSA yourself, show documentation related to your government job, and confirm that your file is being reviewed. I will discuss the precise method for doing that in a few more moments. So I ask that you please stick with me. Let's discuss another thing that was altered today, because the WEP and GPO repeal is not the sole significant revision being implemented. The SSA has also introduced modifications to how it manages what is referred to as Substantial Gainful Activity, or SGA. Now, SGA represents the income limit that is used to decide if a person receiving Social Security Disability Insurance, or SSDI, is deemed to be working excessively to remain eligible for benefits. This limit is adjusted from time to mirror shifts in the national average wage, and the 2026 adjustment has increased that figure. In practical terms, this means that if you are getting SSDI and have been engaged in some part-time or limited employment, the new, higher limit provides you with a little more flexibility before your disability payments are impacted. This is a crucial and positive development for the numerous Americans who depend on disability payments, but also wish to keep a certain degree of employment and autonomy. There is an update as well to the retirement earnings test, which is the regulation affecting individuals who are below their full retirement age and are continuing to work while receiving Social Security. For many years, this rule has led to confusion and annoyance. If you start receiving Social Security before you get to your full retirement age and you keep working and earning over a specific limit, the SSA temporarily holds back a part of your benefits. The key word in that sentence is temporarily. The funds are not gone forever. They are eventually factored back into your benefit calculation after you reach your full retirement age. But in the interim, it can feel like a financial strain. The 2026 revision has increased the exempt earnings limits, which means you are able to earn slightly more from employment before any temporary withholding begins. This is especially significant for the increasing population of seniors who are opting to work part-time during their retirement, either due to financial need or just because they find pleasure in remaining active and involved. And talking about retirement ages and scheduling, this is a topic I would like to dedicate a few minutes to because it represents one of the most impactful choices any retiree will ever make. And the 2026 regulations introduce some subtleties that are important to comprehend with clarity. As the majority of you are aware, you have the option to start receiving Social Security retirement benefits as soon as age 62. However, if you claim at that early age, your monthly payment is permanently lowered, reduced for each month you receive it before your full retirement age, which for the majority of people now lands between 66 and 67, based on your year of birth. Conversely, if you postpone claiming beyond your full retirement age, your benefit increases by a specific percentage for every year you wait, up to the age of 70. Beyond 70, no further increase occurs, so there is no strategic advantage to waiting past 70 to start. The choice of when to begin is profoundly individual and relies on variables like your health status, your personal financial circumstances if you have a spouse, and what other financial resources you possess. But what the 2026 revisions do is introduce an additional layer of intricacy that you must be cognizant of. For any person dealing with the WEP or GPO repeal, the timing of your initial claim, or when you reapplied or requested modifications to your claim, can influence how the retroactive adjustments are figured. And for individuals who have not yet started to claim but are getting close to retirement, grasping how these updated rules will interact with your unique benefit calculation is more critical than it has ever been. I would also like to speak to something that has been circulating on social media and in email messages, as I believe it's vital to distinguish what is true from what is not. There has been a variety of posts and messages circulating that imply the 2026 SSA updates involve a massive across-the-board raise in monthly payments for every retiree, or that some form of exclusive enrollment period exists that seniors must act on right away or risk missing out permanently. I want to be direct with you. Some of the information being shared online is overblown, and some of it is simply completely inaccurate. The actual changes are substantial and consequential for millions of individuals, but they are precise and focused, not all-encompassing. The wisest course of action you can take is to obtain your information from trustworthy sources, such as the official SSA website, your nearest Social Security office, or a reputable financial advisor, and maintain a healthy dose of skepticism toward anything that offers a sudden and effortless financial gain just for following a link. Now, let's discuss Medicare, because for a large number of seniors, Social Security and Medicare are profoundly connected. Your Medicare Part B premium is taken directly from your Social Security payment every month, and each year, the Centers for Medicare and Medicaid Services, or CMS, reevaluates those premiums. For 2026, there have been adjustments to the Medicare premium rates that you must consider in your overall assessment of what your net Social Security payment will be. Even if your gross payment increases due to the WEP or GPO repeal, your net payment, the sum that is actually deposited into your bank account, will be impacted by whatever your Part B premium is. Therefore, understanding both sides of that financial picture is essential. If you have not looked over your Medicare enrollment and premium details in a while, this is a perfect time to take care of it. I also wish to speak to the spouses and surviving spouses tuning into this video, as you represent a demographic that has, over the years, been among the most impacted by intricate SSA regulations, and the 2026 revisions hold very direct consequences for you. If your spouse has passed away and they possessed a Social Security record, you could be eligible for survivor benefits based on their employment history instead of your own, and those survivor payments can occasionally be considerably larger than your personal retirement benefit. The GPO repeal specifically has massive consequences for widows and widowers who were formerly seeing their survivor benefits severely lowered or erased because they also possessed a government pension. As of today, those reductions are being reversed. If you find yourself in this predicament, or if you suspect you might be, I urge you not to wait for the SSA to contact you. Be proactive in reaching out. Confirm they have your latest contact details. Request that they re-examine your case considering the new regulations. You could be eligible for retroactive payments covering the time your benefits were incorrectly lowered, and you certainly do not want to leave that money unclaimed. Let me walk you through the steps for actually handling this, because I am aware that for some of you, the prospect of interacting with the Social Security Administration can seem daunting. The telephone hold times are long, the official website can be perplexing, and if you have ever attempted to resolve a complex benefit issue, you are aware that it can occasionally seem like you are just going around in circles. So, allow me to offer some practical advice that can help make this experience a bit more manageable. The very first action you should take beginning today, if you have not done so, is to establish or sign into your My Social Security account on the web. You can access this at ssa.gov, and it is entirely without cost. Your online portal provides you with access to your complete earnings history, your projected benefit figures, the current status of any ongoing applications or appeals, and details about any money being withheld from your payment. If you have not yet created an online account, I highly recommend that you do so. The process takes roughly 15 minutes, and it gives you control when it comes to overseeing your benefits. After you have logged in, examine your earnings history very carefully. If you notice any years where the recorded earnings seem to be absent or inaccurate, that issue must be rectified, particularly now, since those records are used directly in your benefit computation. If you think you are impacted by the WEP or GPO repeal and you have not yet gotten any word from the SSA regarding a benefit modification, the subsequent action is to phone the SSA yourself. The main national number is 1-800-772-1213, and they have dedicated personnel who can assist with inquiries specifically about WEP and GPO situations. When you get on the phone, have your Social Security number handy, along with any papers related to your government job. Items like pension award letters, employment histories, or communications from your government pension administrator are useful. The more paperwork you are able to present, the quicker and more seamless the process will be. You can also go to your local Social Security office in person. And for complicated situations involving WEP or GPO, a face-to-face visit is frequently the most successful method. You can locate the office nearest to you by visiting ssa.gov and using their office locator feature. If you have a trusted relative or friend who can go with you, that can be beneficial, both for emotional support and for ensuring that no important details are missed during the discussion. Now, I would like to touch upon something that is critically important for those among you who might be able to assist an elderly parent or a spouse who is not as comfortable with digital tools or with handling these kinds of systems. The SSA does permit authorized representatives, including family members, lawyers, and advocates, to work on a beneficiary's behalf. If your parent or spouse finds it difficult to oversee their own SSA affairs, you have the option to become an authorized representative and manage their mail, appointments, and questions on their behalf. This is a very useful choice, and if you are in that position, I would suggest you investigate it. Let's discuss what to do if your benefit payment changes and you do not agree with the new figure. This is a scenario that might arise as the SSA implements adjustments connected to the WEP and GO repeal. The government's computer systems are not flawless, and mistakes can and do occur. If you get a notice from the SSA displaying a new benefit figure, and it does not seem correct to you, perhaps it appears too small or the retroactive payment amount seems wrong, you possess the right to appeal. You are given 60 days from the notice's date to submit an appeal, and I cannot overstate how crucial it is to respect that deadline. Failing to meet the appeal deadline can be exceptionally hard to rectify. If you are uncertain about how to submit an appeal, or if you even have a basis for one, this is a circumstance where seeking advice from a Social Security attorney or advocate can be truly beneficial. Many of them operate on a contingency fee arrangement for disability and benefit appeal claims, which means they do not require payment from you up front. I also want to take a minute and address something that is not brought up often enough, and that is the mental and emotional toll of all of this. For many seniors, especially those who dedicated decades to working in public service, who felt unfairly treated by regulations like the WEP and GPO, who saw their benefits shrink despite years of diligent work and contributions. These developments signify something more than just a monetary change. They signify a kind of validation, a recognition that the previous rules were not equitable. And for some of you, particularly those who lost a spouse and witnessed your survivor benefits cut through no fault of your own, the term relief might not even begin to capture what you are experiencing right now. I want you to understand that your frustration over the years was legitimate. Your efforts to seek change were warranted, and the fact that this moment has arrived is something that deserves to be recognized. Concurrently, I want to be honest with you regarding the schedule. The SSA is a gigantic federal organization that handles benefits for tens of millions of Americans. Executing a modification of this scale, examining millions of separate records, recalculating payments, and distributing back payments is an endeavor that will require time. The agency has stated it is giving priority to the most severely impacted cases. But if you are anticipating a difference in your very next payment, you might be let down. For a large number of individuals, these changes will require several months to be fully processed by the system. That does not imply you should just sit and do nothing. It implies you need to be proactive, remain informed, check in periodically, and ensure your information is correct and current. There is one final topic I wish to cover, and this is especially critical for anyone who is nearing retirement age but has not yet started receiving Social Security. The situation today appears different than it did just a year ago. If you were previously thinking about postponing your claim specifically due to uncertainty about how the WEP or GPO might influence your benefit, that line of reasoning might be different now. If you are a government worker or retiree who was slated to get a smaller benefit due to those rules, your refigured benefit under the new regulations could alter the financial logic of when it is most advantageous for you to start claiming. This is a superb moment to sit down, either by yourself using the resources at SSA.gov or with a financial advisor who focuses on retirement income, and re-examine your claiming approach with a fresh perspective. And if you are married, please ensure you are viewing this as a joint household choice, not merely a personal one. Spousal benefits, survivor benefits, and the interplay between two Social Security records can be incredibly intricate, and the choices you make for yourself have effects on your spouse's financial well-being in the future. Specifically, if one partner had considerably greater lifetime earnings than the other, the decision of when the higher-earning partner claims can have a permanent effect on the survivor benefit that becomes available to the lower-earning partner after a death. These are discussions that are worth having in detail and worth having now. Before I conclude, I want to return to a point I made at the very beginning of this presentation because I feel it is worth repeating. The single most impactful action you can take today, above all else I have mentioned, is to be proactive. Do not wait for a piece of mail. Do not wait for a phone call. Do not just presume the SSA has your correct details and is automatically handling everything for you. Sign into your online account. Review your earnings history. Call if you have inquiries. Go to your local office if you have to. Seek assistance from a family member or a trusted advisor if managing. This seems too overwhelming on your own, because the system does make errors, and the individuals who discover those errors are almost invariably the ones who are actively monitoring the situation. You have worked diligently for these benefits. You have earned them through years of your labor, through payroll taxes, through decades of your contribution to this nation. The regulations are shifting today in ways that are, on the whole, genuinely beneficial for millions of American retirees and their loved ones. But regulations do not safeguard you on their own. Knowledge safeguards you. And that is precisely the reason you tuned into this video today. I will be continuing to report on all the developments as they happen, because this situation is still unfolding. The SSA is set to issue more detailed instructions in the upcoming weeks as it navigates these changes, and there will be fresh information, new schedules, and possibly new steps required from you. So, if you have not done so already, please subscribe to this channel and click the notification bell so you will not miss any of those future reports. And if this video was helpful to you, please pass it on to someone you know, a parent, a sibling, a neighbor, a friend. anyone who is at or close to retirement age and should have this information, because the more individuals who are aware, the more families will be protected. And that is the exact purpose of this channel. Thank you for tuning in. Stay knowledgeable, stay proactive, and take excellent care of yourself because you have most certainly earned it.